I keep hearing this really strange sound all the time. It's driving me mad. I just don't know what it is. Oh, I know. It's a Rolex bubble bursting. So I wanted to talk today about the state of the watch market and watch values in particular, because I think there are some really interesting and perhaps concerning things happening. So I don't really spend a lot of time thinking about the value of my watches. I don't buy watches as investments. I buy them because I like them. But I started thinking recently about how much some of my watches might be worth. Because, well, I've always really wanted a Zenith. I've talked about this on other videos, particularly one of the Revival Shadow models. I just think that they are absolutely epic. And I happened to notice that Goldsmith's chain of ADs here in the UK, part of Watches of Switzerland Group, had a 20% discount on most Zenith models. It was actually a voucher code that you can use online. Now, that's a pretty hefty discount. And with that in mind, I thought, well, maybe the Zenith that I want might be within reach. But, like most people, money is a little bit tight at the moment. And I've also got a lot of watches. And so I thought, well, it might mean that I need to do a one in, one out and sell one or possibly more of my watches to be able to fund the purchase of the Zenith. In particular, I've been thinking about maybe moving on my Tudor Black Bay Pro. As much as it's a great watch, it doesn't get a lot of wrist time. And I thought this might be one that I could move on and perhaps recoup a reasonable amount of its initial purchase price. And like most people, one of the first places you go is Chrono24, where you can see allegedly what your watch might be worth. But of course, Chrono24 bases its market values on how much watches are listed for on its site, not how much they actually sell for. And there can be a big difference. So I started looking at a site called watchcharts.com, which some of you are probably familiar with. And wow, this is interesting. And I wanted to use a few examples from that site in this video today, just to really give you a picture of the state of the watch market. But there have also been some news releases just in the last couple of weeks that give us a real insight into not only the secondary market at this time, but also the sales of new watches. And I find this really, really interesting and also a little bit concerning. But guys, stick with me until the end of this video, because I think it begs quite a few really interesting questions too. So I'm going to put these on so I can actually see something. And I wanted to share a few things with you that I've just seen on Watch Charts. So right on the homepage of watchcharts.com, it gives you a snapshot, an index of the whole market. And guys, I'm using this as an example, but I'm in no way affiliated with Watch Charts. They're not paying me anything for this video. It's just a fantastic free resource. So looking at the market index, watchcharts.com shows that in the last 6 months alone, the secondary market has reduced by just under 8%, which is a pretty substantial drop. And over the last year, it's shown the market having dropped 12%. I mean, 12%, that's just crazy. But I guess it's not that surprising given the current economic climate that we find ourselves in. But the other thing that Watch Charts enables you to do is to actually zoom in on specific brands. And from this, we can see that Rolex values have dropped on average by just under 6% in 6 months. 6% in 6 months. And Patek Philippe, 8%, 8.4% in the same period. And you can do the same with Omega, 3.2%, Breitling, 1.7%, and so on and so forth. Let's just take a look at Rolex as an example. And we can actually drill down even further, and we can see specific models to see which ones have increased, or in this case, mostly decreased by the biggest margin. And one of the real surprises is, for me, the Daytona in gold. So that's dropped by 9.4%. The Daytona is a real hype watch. It's one of the hardest ones to get hold of through an authorized dealer. It's a watch that you would always expect to hold its value very, very well. It's lost over 9% in 6 months. But go down a little further, and wow, So, okay, the one that they call the Sprite, that weird left-handed GMT Master 2 that was released, 2 years ago. This was a watch I remember seeing videos on. There were a number of people giving opinions on this saying, yeah, it's quirky. And because of that, this is a watch that if you can get one, will always hold its value. This is a real hype watch. Yeah, this is a real investment piece, I remember hearing people say. Well, guys, this watch has lost 14.4% of its market value in the last 6 months. So almost 15% in 6 months alone. Just, wow. I find that pretty mind-blowing. Okay, let's take a look at AP and see which ones have really taken the biggest hit. And straight away, my eye is drawn to this Royal Oak Moonphase 26574 ST. Well, according to watchcharts.com, that watch has dropped 17.1% of its value in 6 months alone. 17%. And then we've got the Royal Oak Offshore in rose gold. Chronograph. Absolutely beautiful watch. The 26401 RO. That one has dropped 13.3%. 13.3% in 6 months. Now, one of the other things that's really interesting is an article on watchpro.com that was published about a week ago. And this gives a real insight into the secondary market. So Watchfinder, they've just published their annual accounts, and it shows a drop of 19% in sales revenue over the financial year. I mean, 19% is a whole lot of money. But what's really interesting, I think, is that this is a year ending March 2023. Now, that's nearly a year ago. So if the market has dropped, according to Watch Charts, by a further 8.6%, I think it said, on average, in the last 6 months, then I wonder what their current year's accounts are going to look like. Now, that's the secondary market, but what about the sales of new watches? And there's some really interesting things going on here, guys, too. Firstly, there's a lot of anecdotal evidence of previously hard-to-get watches being suddenly much more available. I mean, Britt Pierce did a great video around a week ago where she was talking about Rolex, and, you know, you can now go into a lot of Rolex ADs and walk out that day with a watch.
It's finally happening, and it's been a while, but Rolex watches are actually available to buy again.
Okay, maybe not every model. It'll depend on what they have in stock in the window. But the little signs saying for exhibition only aren't perhaps as common as they might have been at one time. If you haven't seen Britt's video, go and check it out because I think she makes some really interesting points. I've also heard firsthand from a couple of people that I know and trust in the watch community. I mean, for example, a guy recently told me that he'd been into an Omega AD and tried on the new Seamaster Professional with the summer blue dial. So this is the one that they released to a big fanfare over the summer of 2023. This was a hot new release, a real hype watch. He was offered 5% discount on that watch without even asking. And he said to me that he wasn't in a position to buy it that day, but had he have been, he felt he could have pushed for 10% and was quite confident that he would have got it. Then there's a guy I know in Dubai, and he told me that he has it on good authority, that the JLC boutique in one of the big malls there had only sold 3 watches in the last quarter of last year. 3 watches. That's an average of 1 a month. But that's nothing compared to Bremont. And one of the Bremont boutiques closer to home here in the UK, I'm told, didn't sell a single watch in the same period. Not a single watch in 3 months. I mean, just wow. Well, as unbelievable as that might sound, we also got a statement just in the last week from Watches of Switzerland Group, which gives a really interesting picture of new watch sales. I'm going to put these back on and read a couple of things from that. Now, Watches of Switzerland Group has put out a profits warning to shareholders, and in fact, it actually led to a 30% drop in its share price when this statement was released. So they've revised their projections downwards for the current financial year. And they've specifically cited Rolex oversupply as being one of the factors that's hit their business so hard, because they're getting too many steel sports models coming through from Rolex instead of the higher priced precious metal models. Now, just think about that for a minute. Okay, I get that there's more margin in precious metal watches, of course. But the steel sports models, they were the ones that everybody wanted. They were the ones where all the demand was in the last 3, 4, 5 years. They were the ones that you were lucky if you got onto a waiting list for. And now they're saying they've got too many of them. So in its statement, Watches of Switzerland blamed all its problems on the UK, where underlying demand is said to be weak and more reliant on promotions than expected. A mid-market slowdown might make Watches of Switzerland's problems sound like another simple story of luxury consumer caution. That's until you factor in that Rolex provides 55 to 60% of Watches of Switzerland's total sales. But what's really crazy, and something that I just can't square, is that amidst all of this economic turmoil in the watch market, watch brands are increasing their prices. I mean, let's just take Rolex as an example. And just in the last 3 or 4 weeks, there's been a blanket price increase of between 3 and 6%. And then some of the other brands seem to be doing their price increases by stealth. So take a look at Omega. So they've just released a new Speedmaster Apollo 8. I love the Apollo 8. But this new version has very, very subtle changes. Okay, so they've changed the design of the hand in one of the small subdials to make it like a 3D representation of a Saturn V rocket. And I believe they've also improved the strap. But aside from that, the watch is the same watch that we had before. Apart from the price. The price is 40% more than the model it replaces. 40% more? I just don't get it. And then there's IWC with the launch of that new Ingenieur last year. Beautiful watch, a really nice steel sports watch. But is it really worth the £12,000 price tag? I know I'm not the only one who thinks that that seems like a bit of a cash grab. And that's the really strange thing, because conventional wisdom dictates that, actually, no, I'll go even further than that. The economic principle of supply and demand suggests that when there's less demand in the market, then supply contracts or prices are reduced to generate more demand. But the exact opposite seems to be happening. And I think if brands continue to increase prices in the current market conditions, then really I can see that only leading to one thing. And I think that's that the ADs, the guys in the middle, are going to have to discount their product much more heavily in order to shift their stock. And ultimately, they're the ones who are going to suffer by eating into their margins. But you have to ask, where will we go from here? Well, if you're going to be optimistic, then history tells us that things move in cycles. But the huge growth of interest in watches, and as a result, a huge growth in the watch industry that happened from 2020 onwards, when we had the COVID pandemic.
The number of deaths are nearing 1 million.
Everybody was at home without the ability to spend their money on holidays and eating out and all of those other things.
All travel from Europe to the United States for the next 30 days.
So will we see that growth in interest continue or resume once people's financial situations improve? I'm not so sure. And look, I think that part of the reason that we saw this bubble was because a lot of the people that got into watches around that time did so because they thought watches would be a good investment, somewhere safe to put their money, as they could see the values increasing month by month. But like a lot of people who get their fingers burnt in investments, they often think, well, I'm not going to play that game again, and they quickly lose interest. I mean, you only need to look at the crypto market to see evidence of that. And will the gap continue to widen between what the watch brands want to charge and what us as consumers are prepared to pay? But what do you think? I'd love to hear your thoughts, and also drop me a comment below if you've got any experiences of buying or selling watches recently. As ever, if you've enjoyed this video, please give it a like, and why not go and check out one of these videos next?